How to anticipate consolidation and how to avoid it. Now, in this video, that's exactly what I'm going to be talking about. And I'm going to, towards the end of the video, I'm going to be talking about what I'm going to be watching for going into tomorrow. Now, we all know that consolidation is a pain. And typically, this type of price action is going to be the type of price action that we're going to have difficult time trading in. And I can speak from this as someone who's traded for about going on 8 years now. This type of market environment is one of the most difficult market environments um, to trade in. And not only that, it's one of the market environments that most people will find themselves buying the retracement, then getting stopped out, then shorting the highs and getting stopped out on a push up. And inside this consolidation, the whole time the market is just chopping back and forth. And but in the moment, while you're trying to trade, you're looking at a 15-minute market structure break or whatever the case is, and you're getting chopped up in this type of price action. Now we've all been there. There's no shame in it. But in this video, I'm going to talk about exactly why this happens and how to avoid it. Now, you guys know, again, I was not even focused on NQ going into yesterday and today, and it was simply because of this reality. We will never know when a consolidation will happen, but this is typically going to be, I'm going to give you guys exactly how to anticipate when the market is going to be consolidating for the most part. So, first thing that I always talk about is you need to understand where we are in terms of the daily time frame. So, in the daily time frame, when we look at where we are, number one, we already know we're in a higher time frame consolidation. Now, when we're inside of a higher time frame consolidation, and then you see the market is at some sort of resistance on the higher time frame. So, we're currently sitting at this volume imbalance. So, if you guys are not familiar with this, a volume imbalance is simply where the market has no body closure, and that kind of serves as a fair value gap as well in price. Now, even aside from this, when we just look at the most recent swing points of the marketplace, we're in between this swing high down to that swing low in here. Right now, the market is at a premium. So now we know that any continuation longs, there's going to be trouble because we're sitting at a resistance point. In terms of finding good setups, the reality is this. You want to find a setup where the market is not at a resistance point and it's kind of sitting at support if you're going to go for longs, and then vice versa. If you're looking for, like, let's say a down move, you want to see the market not fighting any key major support. Now, when we go to the lower time frame, you're going to see why this becomes a little bit difficult because we have this current swing point from swing low to swing high, the recent swing high over here. And inside of this 4 hour swing, we essentially have a support level, right? We have this fair value gap that's present in here. And not only do we have this gap, but we also have this order block in here that's been respecting price. So now you guys can see right now, first of all, the higher time frame again on the daily time frame is overall consolidation. So we know that on the higher time frame, we're consolidating and then we're kind of pushing back up. Number two, we know that when we go down to the 4 hour time frame, we're sitting essentially at this support level where I'm going to remove this, right? We're essentially sitting just, let's just say this order block in here, OTE, pretty much the swing low to swing high. We're pretty much banging around in here. So now the market is stuck in between a resistance and support. And this is how you know that we might just bang around. Typically, whenever you have candle closures like this, where the market pins a high, and then we go back into the range. This is not ideal price action. The market pins a low and then we go back into the range. Trying to anticipate an entry or some setup in here is going to be very, very difficult. And the problem is this. Most people will then go on the 15-minute, they'll look at this and say, oh my God, look at this, but this inverted the 15-minute, let me go for longs. Or, oh my God, let me look for sells here because we're hitting this area in here, and then the market starts chopping around. And then they get frustrated. And then sometimes they even, again, I'm guilty of this as well sometimes. They'll start to fight this over consolidation, and then they'll short here because, like, oh well, the market's respecting this swing high down to swing low, and then they end up shorting here, the market pops back up. Again, guys, there's no shame in it. It happens, but you have to be aware of it, of that situation. And that's number one. That's why I don't only watch one asset class because, again, you'll see the thing is this: you see people on social media that may catch a move in here. And again, if you're a scalper, that's perfectly fine. I don't have anything against scalpers, but I just think that majority of people will not be able to scalp. The problem is you see the person who catches a move in here, right? Or maybe they catch something in here on NFP, and what they won't show you is the other, like different losses that they had in here, or multiple different losses, and maybe about the retracement back in here. You never see those types of you never see those people like talking about that type of stuff, and that's just a reality. If you're scalping within this range, it's, again, is it possible? Absolutely. I don't want to make it seem like scalping is not a viable option. However, most people are going to get chopped up because they're going to keep switching their bias the whole time. When you zoom out to the 1 hour and to the 4 hour, it's just chop. right? There's no clear displacement. There's no clear direction. And the problem is trying to anticipate a break out of this is it just becomes more difficult. Not again, is it impossible? No, but like why would you want to anticipate something when the market has low probabilities? So this is why it's so difficult to do this. And this is why you guys seen my focus at the so far this week has been on currencies, right? And we absolutely crushed it because when you look at the daily time frame, yes, to start off the week on euro, we had a clear, defined move at support, and we had a clear resistance. We didn't have to fight another resistance level at this exact point. Same thing with dollar yen, how we anticipated this full move. Like it's crazy, right? We looked on this specific date to look for the market to drop lower into these fair value gaps, and then we obviously had even more continuation from there, right? And look at how this example, there's a support level down here that you can target, and we're not banging through a support level. It's not like, the market, like look at NQ, for example. When we go back to NQ, it's not like over here where we're fighting through this resistance and then we're fighting on this 4 hour support. And now we don't know where the market's going to go because it's kind of a coin toss, right? Now, the question you may be asking is how are you going to try to anticipate a breakout of this overall range? The truth of the matter is you're going to have to wait. That's just the truth of the matter. No one wants to admit it. Um, but the reality is I have to see how this daily candle closes. Then I have to see the price action going into tomorrow. And the thing is this, if the market does, like, right now, as the current daily candle, still a lot of times left, about almost 3 hours. So I don't want to anticipate anything just yet. Um, I'll probably just post it in my Telegram. I'll leave the link for that in the description. But I mean, like, I have a feeling that we might have a little bit of a push up in here, if I'm being honest. It's tough to say, man, because this candle could easily close bearish. So, like, let's just say if this candle closed below yesterday's low, right now, I might start looking for potential sells down into, this low in here, possibly this fair value gap. And now I'm going to look for downside targets, assuming depending on how we close. So, again, when I have no clear indication, that's already a sign for me to just step away and look for something else. And that's why my focus this week has been on currencies because I don't see anything clear even from yesterday. I don't want to look for long continuations when we're sitting at resistance on the higher time frame. And even if yesterday we ultimately ran much higher, like why would I want to trade that move higher when I know that we're limited? There's limited right now we're in a consolidation and we're in a compression. Why do I want to try to take small bits and pieces out of the marketplace when I can find better opportunities on other assets like we did on euro to start off? I'm sorry, when we had this euro on, like, I'm trying to look for these types of moves, man. I'm not trying to look for those little baby scalps. I'm trying to look for like these big high time frame moves. And if you're only watching one asset class, you're not going to always see it. That's just the truth of the matter. Now, again, you can find scalps all day in here, but would you rather find a scalp or a move that has this type of movement, right? Or would you rather try to like get these little pieces in here? Like if we go to the 15-minute time frame, do you want to fight for these like scraps? Everyone's going to have their preference. I personally rather be able to predict a strong trend move, very similar to what we did on dollar yen, where we have this type of movement, where the market is just super clean. Like, look how easy this is. You just short any lower high, and that's it. And again, it's because the daily time frame is indicating downward price based off structure and based off everything we already talked about on this. But yeah, guys, NQ right now, in my personal opinion, it's 50-50. It really depends on this closure. If we can kind of have a strong close at the open, we don't lean bullish. If we don't and we start to fade off, then I'll probably lean bearish. But again, what kind of analysis is that, right? It's 50-50. And right now, in the current present time, there's not enough information to go off for me personally in order to define a very strong bias. So in situations like this, you just wait for daily candle closures, you wait for more price action, and you just try not to rush it because in this moment, someone out there, I guarantee you, just blew a bunch of accounts just trying to go back and forth. And again, it's happened to me so many times in the past as well. But yeah, guys. So hopefully you guys get the understanding of like when a consolidation may be probable and the benefit of actually watching multiple different asset classes. But yeah, if you guys have any questions, as always, leave them in the comment section below. And until next time, I'll see you guys in the next video.